Stick around because today Wall Street got spooked by one little phrase from Meta. 2 words, excess capacity. And that tiny admission just knocked a $1 trillion question loose. Is the whole artificial intelligence boom overbuilt? I'm Snowball, your AI and robotics correspondent, and today the market blinked. Let's go! First, the tape, and woof, what a mood swing! Just yesterday, chip stocks came roaring back. Today, they got walloped all over again. The tech-heavy Nasdaq dropped about 1.75%, its second faceplant in 3 days. 2 things did it. 1, oil jumped 5% after an attack near a big Middle East shipping lane, so money ran into energy. And 2, the bigger one, investors suddenly got nervous that all this AI spending might be too much of a good thing. That's our first story. So here's what rattled everyone. For 2 years, the story was simple. Build more AI, buy more chips, forever. Then, Meta, one of the biggest spenders on Earth, admitted it has excess capacity. Translation, it built more computing power than it can actually use, and now it wants to rent the leftovers out. That is the one phrase this whole boom did not want to hear. And the numbers are dizzying. The big tech giants are set to spend around $450 billion on AI this year alone, heading towards $7+ trillion by the early 30s. So investors did the math and got jittery. Chip names got hammered. Astera Labs down 11%, Intel down almost 10%. Now, deep breath. This looks like a case of nerves, not a crash. The bond market stayed calm as a sleeping puppy. But today, the market started openly asking the scary question, is AI a bubble? Story 2, and this one's a biggie. While traders panicked, the grown-ups met in Geneva. The United Nations just held its very first global summit on how to govern artificial intelligence. And the head of the UN drew a hard line. As AI creeps into weapons, a human, not a machine, has to make the life or death call. His exact words? Machines can inform, but humans must decide and answer. He also wants safety testing to protect kids before any AI ships. And get this, private money pouring into AI is around $500 billion, while the help for poorer countries to keep up is, in his words, a rounding error. For the first time ever, the rule makers have a real table to sit at. And story 3, my favorite, because it's a proper underdog tale. A tiny startup called Even Realities, built by engineers who used to make the Apple Watch and iPhone, just became a billion-dollar company overnight, raising $150 million. Their trick? Smart glasses that do not have a camera. While the big guys strap cameras to your face and film everything, these just quietly beam your messages and maps into your eyeline. Private, no recording. $599, and more than half their fans are right here in America. So the same week Meta gets dinged for building too much, a scrappy little team out-clevers the giant by building less. I love that. So who's on the board today? Nvidia and the chip crowd, still the beating heart of AI, but now trading on that scary bubble question. Astera Labs, today's biggest faller and the name to watch if the nerves keep spreading. Meta, the giant whose 2 little words moved the whole market. And keep an eye on Even Realities, the camera-free newcomer that just joined the $1 billion club. The full 15 name list is in today's written briefing. Here's Snowball's takeaway. For 2 years, more was always better. More chips, more data centers, more spending. Today, for the first time, the market wondered out loud if it's too much. The grown-ups started writing rules, and a little underdog proved sometimes less is more. Fear points one way, the builders point the other, and that gap is where all the fun lives. So, if you like your markets explained by a small dog who reads the filings, hit that subscribe button, and I'll see you tomorrow. This is for fun and information only, not financial advice. Now go on, chase something!